I'm Brian Fowler, president of Blind Creek Resources Limited, listed on the TSX Venture Exchange, ticker symbol BCK. Blind Creek is focused in the Yukon, Northwest Territories, and British Columbia. The company's key property is the Blend Project, one of the largest undeveloped lead-zinc-silver deposits in Western Canada, plus plans to advance the recently acquired, fully permitted historic engineer gold mine in the Atlan District of Northwestern BC. Check us out at blindcreekresources.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Ross Kay. He's a real estate expert from thewealthyhomeowner.ca. Welcome back to the show, Ross.
Hey, thanks a lot, Jim, for having me on.
A story that came up in the national news the other night is something like a quarter of Canadian homeowners find themselves with unexpected bills concerning their house that they weren't prepared to pay. And I recall we did a show about whatever you paid for your house, over its lifetime, you can expect to pay about that same amount to maintain it. And I don't think folks are being told about that when they buy the house.
Yeah, they're not being told about it, Jim. And actually, so here's another question. You've caught me right off guard with your question because I didn't know this was coming. So the coincidence that you have today is that in the Toronto Star, there is an article there by a reporter. Pagliaro is Jennifer Pagliaro, I believe her last name is Pagliaro, where it talks about the housing affordability problem in the city of Toronto and their housing stock. The housing stock that they use for people in need. Subsidized housing, we can word it that way. And they're finding that they have, I believe in the article, it says that there is a $2.6 billion backload of repairs needed to those buildings. And they're looking at $450 million, I believe, in this year, that is needed, just to keep the housing stock basically where it is today. In other words, it's already falling apart, so to keep that brick from falling out of the wall, there is some repair work needed. Homeowners are in exactly the same situation. The biggest myth that is out there, one of the reasons that we calculate an RMR, renovation, maintenance, and repair factor on any wealthy homeowner client's home, is so that they know what their expected repair bill is going to be over the next while. You've got to remember, it's not only repairs, but it also is upgrades. If you were to install a 1980s style kitchen, which in the 1980s that Formica Euro kitchen design was out there, in today's homes, that house would be next to impossible to sell, or you would have to take a discount because the new buyer moving in, even though it's a brand new kitchen, would say there's no way I'm going to accept that level of quality. So as the quality of the overall new housing stock increases, the expectation of consumers or home buyers is that the house is going to meet that same quality component in the resale market. So if you're not keeping your home up to date, don't expect to get market value when the market is slowing down. What you're talking about here is, Jim, is that there are not budgets created at the time that a home is first purchased, and that budget followed over the lifetime of a home. What I mean to say is this. If you're a first-time buyer and you're entering the home ownership for the first time, you're becoming a homeowner for the first time, that is the moment when you want to have your home ownership situation structured in a way that is going to support you over the next 40 or 50 years of home ownership. You don't want to start out on the wrong foot right off the bat and then stay on that wrong foot for the next 30 or 40 years. Now, there is a segment out there in the marketplace, service holders to the real estate sales industry, who want you to keep on a wrong foot right from day one. This is best exemplified by the banks. If you walked into a bank today, they would be qualifying you on a monthly mortgage payment. if you had your friends or family, you did some research, maybe you would say to the bank, you would be that one rare odd person who says, no, I like to have biweekly payments. The bank wants you to be in that position because the bank wants to get as many monthly mortgage payments as possible for this reason. The very first question that any potential first-time home buyer should be asking themselves is, how am I paid? Am I paid weekly? Am I paid biweekly? Am I paid monthly? Now, in my former career as a real estate sales rep, I was paid periodically in large sums, lumps of sum. In other words, I did a whole bunch of work for a couple of months, and those houses would all close on the end of 1 month. The most common month in Ontario is June the 30th, or June the 28th, or May the 30th, or May the 28th, and those 2 months is where your deals closed, and all of a sudden, your income came in at that time. Now, when you became more successful, that leveled out because you always had business coming in, but for most people, that's not the case. Most people are paid either weekly or biweekly, and I think a study that we've done of our own members is most of the people are biweekly. What that means is that any home buyer who's purchasing a home should be making a mortgage payment on the same day that their wage check comes in. So the same day that your earnings are deposited in your bank, that is the day that those funds should be extracted. It needs to be set up in a certain way, but it is such a financially empowering thing for a home owner to do it that way, because this goes back to your question, Jim. If you have a budget set up, and when your paycheck comes in, a certain amount of the budget of your paycheck is taken away from you, almost like a garnishee, or like a mortgage. You put your money in the bank takes it out. I don't think you probably ever had a bank contact you, Jim, in your life and say, hey, Jim, is it okay if we take your mortgage payment out this month? They just go ahead and take the mortgage payment out. So why not structure your home ownership situation based on when the checks come in? So if you make $1,000 goes into your bank account and $600 needs to go out towards your house, needs to go towards your mortgage payment, your hydro, your gas, your maintenance fee, your RMR budget, and you have $400 left over, you can make a decision. You can say, what am I going to do with that $400? I've got, $100 for groceries, $150 for my car. Okay, now I've got $150 left. The only way that you realize that is if your mortgage payment coincides with your earnings, however you're paid with your paycheck. The banks don't want you to do that. They want you to do monthly. It is such a challenge for homeowners to budget over the course of a month to be ready for that mortgage payment at the end of the month, that's where they get into trouble. That's also where the banks have conned everybody by not having an RMR budget as part of the financing. This is so bad in Canada. There is only one place in any website anywhere in Canada, government or privately run, where there is even an opportunity to hear about what it's going to cost to own a house. And that's on the CMHC's website, on their mortgage loan calculator. If you hover over homeowner expenses as other, a little box pops up, and I mean a little box looked like it was designed in the 1990s, that mentions a 1.6 to 3% monthly homeownership cost. What I'm saying is every single home is unique. Every single RMR budget is unique. You need to go through the process of creating the budget, because then the question you had to me at the start of this little run-on speech that I just gave you never happened. No one is caught off guard.
We'll have more with Ross Kay right after the break.
I'm Bill McWilliam, president of Cascadero Copper, CCD on the TSX Venture Exchange. Cesium is one of the world's rarest metals with a growing industrial demand. Drilling is underway on our Tehran property in Argentina to prove up a cesium resource. Cascadero's patent-pending leach process has the potential to make Cascadero the lowest cost supplier of cesium in the world. Visit our website, cascadero.com, or phone us at 604-924-5504.
GEM International is a new diamond explorer in the richest diamond producing country in Africa, located next to the fourth largest producing diamond mine in the world. International Spotlight is on an 1109 carat diamond recently discovered in Africa by a fellow Canadian junior with a proven operator and finance team. GEM International trades on the TSX Venture Exchange, symbol GI. Visit us at gemdiamondmining.com.
Welcome back. We're talking with Ross Kay. Ross, we have a couple of questions from listeners. One says, how come, we talk about houses and not about condos? You thought house, no matter, you were referring to houses as homes and thought that included condos. Why the confusion there? Do people not consider their condo a house?
Yeah, so this is another myth perpetuated by virtually everyone who comments on housing. Houses are not purchased as an apartment or a townhouse or a semi-detached or a detached house. Houses are purchased on a budget. If you are qualified to spend $300,000 on the purchase of your home, in certain parts of the country, that's going to be an apartment. On other parts of the country, it's going to be a detached house. In other parts of the country, it's actually going to be a luxury detached house. And in yet other parts of the country, it may be part of an apartment. It is what the purchase price is what matters. Everybody, you've heard in the paper, Jim, is you've heard everybody talk about GDP to house price ratio, or income to house price ratio, saying that all of these ratings agencies have said the Canadian housing market is in trouble because these ratios are out of whack. Well, they're out of whack if you consider that that's how people actually buy houses. In other words, they're going to buy a detached house. That isn't what happens. People go to the bank, they get qualified for a certain amount of money. Now, as you know, as I said earlier here before the break, and I've said on other shows, the bank's methodology for manipulating you into taking out the biggest mortgage possible has evolved over the last 40 years. They are experts at it. Real estate agents love it because they earn more commission by selling you a more expensive house. That said, you qualify for a certain amount of mortgage, you have a certain amount of down payment, and that dictates the amount of money you can spend to purchase your house. Whether that house is an apartment or it's a fully detached house is solely dependent on those two factors. And it depends on when you're living, because does your local market, at which price point, how much house can you get? All that being said, when we're talking about, I think what this you're getting at here is people are under this false impression that apartments in Greater Vancouver are still rising in price at the same time that single detached houses are falling. And I know you've got some amateur housing analysts out there who have pontificated that that's what's going on in the market. What we would say to those people is that this is normal. As the housing market corrects, there's an imbalance between the houses that are actively for sale at the given moment and where the buyers are being driven at that same moment in time. So when I look at the housing data for Canada for the last 40 years, I would tell you, Jim, that there are only 4 months in the last 40 years where the Canadian housing market was actually balanced. All the rest of the time, the market was being skewed because where the buyers were looking to buy and where the sellers were looking to sell. That imbalance is what makes a housing market become what we call the property ladder. Property ladder is better described as property steps. And unless those steps are there, housing prices can't rise. So what you're seeing in Vancouver, where people are saying, we're in bidding wars, we're seeing higher prices on apartments. First of all, your data is being skewed by where the sales are taking place, number one. Number two is they're being skewed because of the quality of apartment building being purchased right now. And three, they're being skewed because there are some townhouses that are priced the same as what some apartments are, meaning that you then have a choice of housing types that you want to own for the same dollar. Those factors are all in play. In stage number 2 of a housing market correction, the lower priced homes in a region can still accelerate in price. It has nothing to do with them being apartments. It's where the price points are. What you're seeing is people who have their lower priced detached homes listed for sale, which in Vancouver would be between, Greater Vancouver, we're just going to use that example here, which would be between $1.4 million and $1.8 million, $1.9 million. Those people do not have their houses for sale because they still don't see enough opportunity of trading up to a larger detached home. So that part of the market is removed. This automatically puts pressure on the price point of the townhouses, which automatically puts pressure on the price point of the apartment. It's got nothing to do with the fact that it's an apartment. It's got everything to do with the price point that we're talking about. If there are people who are looking at $500,000, yes, that category of home, those homes that are priced at $500,000 in Vancouver, whether it be apartment, detached, or townhouse, and I know there's no detached, that's what we're talking about. So when I'm talking on your show here, my commentary is always on the overall market, because this is what everybody should understand. There is not a single segment of a housing market or the housing stock that is not, in the end, affected by a housing correction. Every house that exists is affected by a housing correction. Whether you're the first ones to get hit or the last ones simply depends on how the buyer base is structured when the correction begins. In Vancouver, there was such a pent-up demand of millennial or first-time buyers that those people are still active in the marketplace. The only thing they can afford is an apartment. So people are misconstruing supply and demand on apartments actually being supply and demand on a certain price point. That's what we're talking about.
We'll have more with Ross Kay right after this.
Lotus Ventures Inc. is a BC-based medical marijuana company poised to launch into the rapidly evolving cannabis sector. Lotus is in the final review stage of the Health Canada approvals to become a licensed producer, having arranged facility financing of up to $12 million, plus building permits for its prototype indoor production facility. Shares trade under the symbol J on the Canadian Securities Exchange. Visit our website at lotusventures.ca.
Keep informed. Receive our weekly recap of thought-provoking articles, podcasts, and radio delivered to your inbox for free. Sign up for the HowStreet.com weekly recap on our homepage, HowStreet.com. Welcome back. We're chatting with Ross Kay. Ross, another listener question. You're getting questions now. That means you're popular.
Yeah.
Ross, when will we see an increase in inventory in single-family homes, especially in Victoria?
Okay, so we're getting really specific here, Jim. We've got single detached homes, and now we have Victoria. So if you're if you were using the multi-homeowner program and you were using it to buy a home, this is actually one of the metrics that we measure And it's one of the ones, if you're in the buyer program, we actively track. So the question you're asking me is, when is an abundance of single-family homes going to hit the market in enough abundance that the price change is going to start to be reflected? You're going to see lower housing prices. Because there is not a hit to the economy right now in British Columbia. Now, it's my opinion that this hit to the economy is coming because of the reliance on real estate for GDP in British Columbia. So I do believe that hit, on top of what you're already undergoing, is going to take place. As we said in last week's show, nobody was aware that British Columbia, in the first third of the year, British Columbia province-wide, had dropped $100,000. I had people actually email me, Jim, and say, where's Ross coming up with these numbers? We can't find it anywhere. So I have to show them where to look on the British Columbia Real Estate Association's website to find this number. But it's there. Now, I'm going to tell you it's still wrong. The magnitude is even greater. But forget what I have to say. You can use their own numbers to check this out. So when we're talking about enough inventory coming in, there is no motivation for anyone to list their house for sale in Victoria right now, because they are not looking to trade up to a more expensive home. Now, one of the reasons why we track the new homes market and the resale homes market, and then both of those markets in aggregate, is because we also know that how those two markets interact and what that's going to result in listing inventory, and then what the result of that has on prices. So when we say to you it's real estate math, it really is that easy. If you know how all the parts work together, and if you can put the puzzle together the way that we do, that's what you know what the picture is going to look like when you're done. So you're going to don't expect a high number of single detached homes to come for sale in Victoria right now. There is nothing on the horizon right now that we could say, hey, 2 months from now, you're going to see your listing inventory double. Certainly don't listen to the real estate board, because if you were living in Toronto right now, you would have heard rumors reported on BNN, CBC, CTV, that new listings had increased 33% in April, which was a record. That is a total fraudulent comment from our perspective, because we know active listings are 50% today in the Greater Toronto area than what they were in 2007. In 2007, housing prices were increasing. In 2017, in the Greater Toronto area, housing prices are still increasing. But the active listing inventory is half. So when we're talking about Victoria, to forecast when your single detached homeowners are going to start listing their houses for sale, we can't tell you that. But what we'll tell you is this. Watch your provincial GDP numbers. Watch your job losses. Watch your housing stock being built. Watch how the bank rate, in other words, the interest rate. Watch all of those things, because in aggregate, that's going to dictate listing inventory increase. But I'll also tell you this. Housing prices are going to drop regardless of how many people list their house for sale. There are people who have to sell. The quality of homes that you're able to buy for your home buying dollar is increasing as we're speaking. Just bear with us. Just bear with the market. If that sort of thing is really important to you, and I personally believe it is, we're talking tens of thousands, hundreds of thousands of dollars of difference over a 40-year period of owning, by purchasing at the right time when the inventory works for you, then I'm going to encourage you to seek outside help and find a resource where you can get that delivered.
And Ross, you're one of the few people who's ever mentioned only the best quality homes sell, and what's happening in the Vancouver area is not the selling price, but people, if they're willing to pay $1.4 million, are now getting a decent house instead of a shack. They're still paying the same amount of money. They're just getting a better house.
Exactly, which is how real estate myth works. It's how organized real estate, why they call it the average selling price, which it's not. It's the average purchase price. There are literally over 120,000 home buyers in the province of Alberta who purchased a home since 2014 who were led to believe housing prices weren't correcting what they were. They were led to believe that they still should be paying more than they should for a given house. There was also about 20,000 home buyers in Alberta who realized they can get a lot more house for their $350,000, $400,000, $500,000 than they were getting 2 years ago. And those people capitalized on the market. You can choose to listen to organized real estate, who never has spoken about quality differential when you're buying, ever. You will not find it recorded in any textbook. When I can also tell you, I could sit down with any appraiser in Canada, and within 10 minutes, they would be shaking their head, yes, yes, yes. Quality is one of the most important factors in understanding how the housing stock prices are changing.
Ross, always fun talking with you. Thanks a lot for chatting with us.
Hey, thanks, Jim, for having me on. I really appreciate it.
My guest has been Ross Kay. He's a real estate expert. His website, thewealthyhomeowner.ca. You're listening to HowStreet.com radio. Questions for the show or for our guests like Ross can be sent to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.